right, well, good morning, everyone. Today, Judy Chow is going to give us a presentation called Meet and Learn, Pre-Qualify Your Buyers with a Purchase Loan to Close Successfully. Let me give you a little background on Judy, and I've known her for 30 years. We were both about in elementary school or kindergarten together, right? She's a mortgage loan professional for more than 30 years of service, and I've known her this entire time. She's originated over $1 billion in loans, both residential and commercial, which gives her the expertise and experience learning through the process to be able to help you find your best buyers and close on time. Please be sure that she has handled these from start to finish. I gave her a very difficult prospect not so long ago, and she was able to work that out. So let's welcome Judy Chow.
So basically, this one's to help real estate agent. So when you see a buyer or potential buyer, how do you pre-qualify them? So I'll start with the first slide. When you pre-qualify your buyers, you can take picture or later I can send you the PowerPoint if you sign up. You need to ask them, first question is, you probably know the price of the property they're looking for. At the same time, you're going to probably ask them how much down payment they have. Sometimes they don't want to tell you, but they really should tell you how much down payment they have. So you know they have money to buy. And of course, the city they're interested in. The reason why for us too, these points are important for the loan because it depends on where the county is. The loan limits are different. LA County, Orange County is the same, but San Bernardino, Riverside has a different loan limit. They don't have the high balance. And the type of property, that makes a lot of difference too. Single family home is the easiest one. Condo, once you buyer wants a condo, I'll talk about what you need to watch out for. So you need to ask them these, pretty much the 5 things. The fourth one is primary home, second home, or investment property. The qualifications are different and their interest rates are different. Fifth, last but not least, you should ask them to get a loan approval letter from a loan officer to pre-approve them. It's like taking them shopping. You want to make sure they have money or they're approved. Otherwise, they find a house they like and they really can't buy it. So you really want to do those steps, those 5 things. Next one. Okay, so here are the key terms for us to pre-approve the buyers. If the real estate agent knows that, they can be very helpful. I did it just to finish a transaction. Both the listing agent and the buyer's agent were very, very helpful. So we're able to get to the loan doc stage in 15 days on a condo. Condo are more complicated, but so the agent if can help, listing and buyer agent will help the process to move faster. So when we pre-qualified them or pre-approved them, we of course same time we ask for the purchase price and how much down payment they have. I have in parentheses season and source. Most of the lender want that money in their name for 2 months, so they ask for 2-month bank statement. That's why it needs to be seasoned. If they don't have it, some program will let you have gift. So you have to know what they're buying. Investment property on a Fannie, you cannot have any gift. It has to be their own money. So you need to know where the down payment. A lot of people that I do pre-qualify for, especially from China, I said, do you have the money? They say, yeah, but it's not here. Or it's somebody else's name. This is very common. I mean, I do that almost every day. I have people tell me that. And sometimes you have someone money all here, but I would say 70% of the time, the money is not in their name. So we have to figure out how to get that money into escrow or into their account. So that those 2 things are important. Number 3 is income qualification. So there are basically 3 different types. One is full doc. That means the person has W-2 or tax returns. Those are probably the easiest. You just look at their income, you do the debt to income ratio and run the credit report, see how much they owe. Then you can see if they're approved or not approved. It's very easy. It's a strict guideline. So a lot of time you see listing agent ask for you for DU approval. That's the Fannie Mae desktop underwriting. We can only do those for full doc. If they don't have full doc, you can't get a DU. I saw one yesterday. I'm writing a pre-approval for. It says they like to get a pre-approval letter, but they prefer a DU, but I told the buyer, you can't get a DU. It's not a full doc, but still, I think they'll take that pre-approval letter. Okay. The second one is called Easy Doc. So there's a variation of Easy Doc. Primarily, Easy Doc are used by self-employed people because they don't report as much on their tax return for their gain. Otherwise, they have to pay a lot of tax. I had a client 2 years ago, Korean. She owns a kimchi company, so she makes 600,000 a year gross. But if you look at her tax return, she makes 80,000. So she wrote off. I don't know what she wrote, but she wrote off a lot of stuff. So 80,000 she couldn't qualify. So what she had to do is use the bank statement. When she showed me her 12-month bank statement, she did make like 600,000. So we do a factor out the expense. We don't go with the tax return. So she was able to buy. So those are really for self-employed people. Profit and loss is also for self-employed. If they don't have the 12-month bank statement, they have their own profit and loss. The CPA writes a letter. They can also do that. The last one is for employee easy qualified. They do a verification of employment. That means their boss is willing to write a form for them. Why would they do that? Not W-2. So some people have bonuses and commission. It's not very stable if you look at the W-2 and all that. So their employer is willing to do what we call the VOE form for them. They can also don't have to show tax return. So if they need an owner that cooperate with them. The last one is called the no work income document. That means they don't have a job. Okay, they might have a job, but the job doesn't make enough. They all have no job. So in general, there are two types. One's called asset-based. So you see them all the time. I think East West Bank has a, Cathay Bank has a, I don't know, US Bank has it or not, asset-based. What they do is the person needs about 50% of if they buy $1 million home, they need to have 500,000 in their holding. So they either put 40% down with a 10% reserve or 30% down with 2-year reserve. So they're called asset-based because they feel these people are wealthy. So they do this called asset-based. On a full doc, you can also do asset-based for someone who's older, retired, doesn't have income, or just Social Security income, which may be 2,000 or 3,000, but they have a large retirement fund, maybe $1 million, $1.5 million. Fannie and Freddie can also do asset-based. What they do is they figure they have so much money, they divide it by a number. The number for Freddie is 240 months. So you figure they have 2 million, they have 2.4 million. That means 240 months, they have 10,000 a month. You can use that. They just show how much on the retirement fund. That's also asset-based on the full doc. But the Easy Qualify has a lot of these asset-based. You just have money and then they'll get the loan for you. The last one for no work-related income is rental income. You might have heard of the term DSCR. Anybody heard of that term of some time? Okay, it's a program she heard it. It's a program that's strictly based on the investment rental income. It's a very good program. We did one CPA. He's not really wealthy. He has 49 property on DSCR income. That's because the property itself generate rent income to cover the debt service, the mortgage payment, the insurance, the property tax. So you got to find a really good property. I just did one in Panorama City. It's a condo. He bought it for $450, which is a good price. Condo, 3-bedroom. We did a rent survey for that DSCR program. He can rent out for $3,700. That's a pretty good for $450,000. It's a condo. So he was able to get a really pretty good rate on it. The reason why that program is good is because someone who has, like the guy who has 49 properties, he could probably never qualify on a full doc. He has too many debt. But those would treat each one individually based on the income. So that's actually a very popular for investor. It's called based on the rental income. The last one that's important, of course, is credit score. It speaks a lot, especially on the easy qualify. The score means a lot on the rate. The Fannie and Freddie, not that much, but it still makes a difference. Yeah, Fannie and Freddie, you can probably get it down to 620, but a lot of the easy qualify, you need a 700. they're not going to even look at your portfolio unless you have 700. So those are very key items when we pre-approve the buyer. We could probably do this verbally. They'll tell us the answer in about 30 minutes. I don't know how good the answers are, but that's how we pre-approve them on an interview. So sometimes they tell us the credit score is really good. They got it off, at the bank. But the credit score has to be based on the TransUnion, Equifax, and Experian, the three major bureau for the lender. But the one they get in from the bank is pretty good. I think we'll give a picture. The guy told me he had 800. We ran it, he had 740. So it's a little bit off. Okay. So there's this one is for foreign buyers. So some people have foreign buyers. Okay. We can do the no income again, but that means they have rich asset. They have a lot of money, like 40% down, 35% down, and a reserve. They can work in the foreign country. We can verify foreign country as well. They can do even like a verification employment paper for foreign country. But those are probably a little bit tougher. We're going to check out that company, see their website, and they really exist. But we've done work in a foreign country. The CPA also can do the profit and loss in foreign country. They either do the no income, most of them, because they have a lot of money they bring over. I think we're closing one today. They bought a 2.5 million in Northern California. They only borrow 800. So they basically do the no income because their down payment is so much. And their reserve was 150,000. So they have a lot of money. This is a foreign buyer, no credit score. The one that they always use a lot is a DSCR. It's very easy for them. They're not here. They just want to buy investment property. So they don't have to show anything other than that property's appraisal income. Okay, those are important for foreign buyer. How to get a loan approval fast? A lot of seller wants 21 days. I get calls like that all the time. Can you close in 21 days? Or 30 days is the maximum they want to deal with, unless the seller can move out. So closing fast and then approval fast is very important. You can get approved fast and can close later. So the thing we do right away is order appraisal. Okay, you gotta know the value's gonna come in. Then if you have a condo, this is where you need to get started early. Condo has lots of documents, especially now. Do you remember Florida had a big hurricane? All these high rise got damaged. After that, Fannie Mae add on a lot of more guideline for doing condo. So the questionnaire becomes more intense, I suppose. So the first thing you need, if you're listing agent or you representing buyer, you can help in getting this. I just did one, just closed. I mean, they're closing tomorrow, I think, but they got approved in 10 days with a condo. The listing agent was really fast. He got the master insurance. Okay, so we have to review what's on it. And then we realized he needs what they call the interior insurance, HO6, because condo master 99% of the time don't cover interior. So you have to buy the HO6. They're hard to get now, insurance. You need to give them time. Some takes 2 weeks. It's not so fast. So if you're agent for either side, you want to make sure those are done early. Then the third item is condo certification. That is required. US Bank required that. Everybody requires that. Okay. So the important item on that questionnaire is their litigation. If the litigation, it depends. Most of the time, they don't want to do it. Banks just don't approve this one. Deferred maintenance is the new one that they added on because of Florida hurricane. So they want to ask this question, do you have deferred maintenance? And if you say, yeah, if you say, I need to pay, then it's okay. They say, how much? 5,000, then probably it's okay. But if there's structurally deferred, even elevator, they want to know how much it costs to do this, and they're not going to fund this loan because it's too much money, involved. Then they ask for occupation ratio. They want to know if this project has all tenants or primarily a prime owner. If you're owner occupied, this is where it's different. If you're owner occupied buyer, the lender does not care if lots of tenant. But if you're also investor buying this one, it has over 50% investment, they can't get that loan. They think this whole condo is investor. The budget is required 50% of the time. Depends on if you got the full review on the condo or limited. Why would you get a full review? Depends on the lender. Most of our lender does not require the budget, but if deferred maintenance was an issue, they want to see what is wrong with it, how much money you have saved in your budget. The rule of thumb, once you want to see budget, you need to have 10% of your annual income as reserve. I'm pretty sure a lot of condos, small ones don't do that, but they're looking for that figure. If they ask for budget, you got to make sure the reserve is 10% of the annual income. You know, they collect HOA, they collect laundry, whatever the annual income on the budget. So, so the one we just did, the listing agent was very, very helpful. I sent him the condo cert. I said, here's the condo cert, okay? Actually, we got 2 sets. I don't know. I don't want to tell you which bank was sent to first. The condo cert was 4 pages, 50 questions. That's all it's going to die, right? So I sent to a different lender, only 1 page, 20 questions. So there are different lenders. What's the difference? The one that's really, really tough, maybe the rate's a little bit better, like an 1/8, but it's just really tough. You may not get the loan funded. So we're trying to send to a one that has a simple condo cert. So the one we sent only has like, I don't know, 10, 15 questions, or pretty easy. And the listing agent was able to get the condo president or a board to fill out. But I kind of told him, you can't put litigation on there. If there's one, this one is dead, you know? So we tell them if they want to help. The listing agent was really helpful. On this, the last one too, the buyer's agent was very helpful. We weren't sure we needed HO6. We never saw the master until very, very later. But she went ahead and shopped for HO6 for the buyer, which is okay. You don't have to pay. You just shop, have it ready, and turn out he needed it. We found out last week. If you start shopping last week, you won't get that HO6 until maybe 2 weeks. They're hard to get. All the insurance are hard to get. You can also get insurance to give it early. They don't charge you if you get it. They'll know you close escrow. They don't charge the buyer anything. So if your agent want to help, even a regular home, you know, the high fires one, we did a loan in, it's a Diamond Bar. It's a $800,000 home. Because of high fire zone, the insurance was $5,000. It's, yeah. So, you know, it could kick the DTI off because so high. Normally it's like 1,500. That one's 5,000. So we sort of found CalFed and got her a loan. It turned out to be like 3,500. The insurance a little bit better, but they're expensive. So you can help as an agent, help them get that insurance started earlier. So insurance quote. This one is a lot of people think they got a quote. I had 3 transactions. The buyer just went out, they got quote. They got it from online. I don't want to name the people, the insurance company. They got it online. They didn't go through nowadays you really want to go to an insurance agent, a broker, because they know where to get it. You go online, they'll get a quote. What happens once you go into once you start asking for, this is different than a quote, evidence of insurance, EOI, they can't issue it because the quote was too low, or the company doesn't really even want to insure. So they never give us the EOI. We can't close the loan. The evidence insurance actually has the buyer's name on it, has the property on it, and the exact payment. The quote is not that useful nowadays. You can't get the EOI. There are 3 of them. They give the client quote. When we wanted the EOI, they couldn't get it. So I had to refer him to a insurance agent. You know, Mike, what's it, Mike? What's that guy? We used to come here all the time. I forgot his name. But anyway, he working for farmer. So they can get one right away. So that part is important, get the evidence. Contingency removal is a big item. People always ask, okay, on their appraisal contingency, physical inspection, we don't deal with. It's mostly the real estate agent. We don't work on physical inspection removal. So you have to deal with it. Appraisal contingency. So appraisal report comes out, the buyer gets a copy. Their main thing they look for is the price. If they bought it for 1.5 million, it came out to be 1.5, they're very happy. Really goes above because the appraisers are very smart. They don't want to go above because then lender might think there's something wrong with this transaction. You know, it's priced at 1.7, you got it for 1.5. Was there something going on? So they're pretty smart. They just praise it at the value, sometimes a little bit over. But say it goes below, you bought it for 1.5, came back to 1.4, then you have a little problem. if the borrower has a lot of down payment, it doesn't affect their loan because the down payment is enough. Like they have 40% down, 35% down. So it doesn't matter what the value is. But the buyer may not be happy because they'll see that report, right? So they may want to negotiate. So, but it rarely happens nowadays because the price are going up. You won't get a declining value. The other items are important. You should look at the report. So if they didn't have those safety feature in, like the what do you call it, fire alarm in, it's really cheap, but they didn't have it in. When the appraiser came, he's gonna know. Then they have to come back. You have to put it on. They have to come back with delayed time. And carbon monoxide too. They have to have those. They took a picture. If they're not there, they just note it, and they'll come back. They charge another $100 to come back. And but time, you're wasting time. So the listing agent needs to prep to make sure when the appraiser comes, all those safety feature is in. The biggest safety feature that people have problem is they build something in the back, not permitted, which is okay. You don't count the value. They put a stove in the back. You know, that's not legal. The stove, it's okay to put a bathroom in the back. It's okay to put a shower in the back, but the stove is totally not acceptable because it's dangerous. So if you know that there's a stove before the appraiser comes, get rid of the stove. Not only have to get rid of the stove, you have to cover those gas outlet thing and take the hood down. If the stove is out of the way, it doesn't matter where it is, as long as it's not installed. I would say a good, decent appraiser would not mention anything because it's not there. But some appraiser could get really, really fussy and they'll say, oh, I noticed there was a place you can put stove, you know. There's no stove there, but there's a whole bunch of stuff. So then they'll ask, it's cause a little problem. They'll ask the seller, they'll ask the buyer what's going on here because stove is unpermitted unless they got license. They didn't get a permit for it. So those are the things appraisal report people should prepare before get appraiser there. Okay, so the loan contingency removal. People call me and ask, I never answered that question. I cannot answer for the buyer. The reason is because buyers saw the approval condition. They should know whether, well, one of the things they're going to do a verification of employment before funding. Are they going to still be working? I mean, those are things that I cannot answer for them. Maybe they know the wife is going to go part-time. The income's not going to qualify. So we don't, I don't think real estate agents should tell them to remove their loan condition. You can ask them to ask the loan officer. I'll show them all the condition. I tell them to decide, right? Because if you tell them remove, something happened, they're going to say you told them to remove the loan contingency. So how do we tell this loan is pretty much going to go through? It's when all the conditions are met, clear, and get to what they call the CTC. In the old time agent will always call, Judy, is a CTC yet? They know what that means. Okay, CTC means clear to close. It's a very important term in our industry. We keep on asking the underwriter, are we at CTC? Because when you're at CTC, that means we can order a loan doc. If you're not there, you cannot order a loan doc. So that's a really important stage. That's pretty much ready to go. It's 99% done. Okay, so CTC, I'm going to tell you what the CTC requires. Okay, so CTC require the income documents and the debt ratio approved. So for example, when they had income document came originally, it was within 50% debt DTI, which Fannie's okay. But say also the insurance went up to 5,000. The debt ratio could jump up to 52. It's not okay. So they can't get to CTC. They're going to ask them to borrow less. They can't increase their income. They probably have to borrow less, bring it a little bit more down to get it down below 50. So this is what they do underwriting just before CTC. Then they look again on your source of fund, the documentation approved. Remember we talked about the 2 months, but say you have a gift fund. They want to make sure the gift letters are signed. It's acceptable for most of the Fannie and Freddie loan. Some of the non-QM takes us, some don't. But you have to remember for investment property, Freddie and Fannie do not want gift fund. They figure if you buy an investment, you should be all your own money. The appraisal needs to be approved. Remember those little things? So the underwriter have to look at those things are fixed. For example, they said there's no fire detector. They have to go back and take another picture. So want to see the second picture put in. Condo certification and HOA document approved if that's a condo. So I think you had a condo, right? Yeah. So condo are, yeah, a little bit difficult. Yeah. Insurance, the EOI, remember, evidence of insurance has to be approved. So it has to have the person's name on it. The vesting has to match. And then, of course, the amount should, they ask for a certain amount coverage. They usually ask to cover the replacement value or whatever they're trying to fix. And if you have condo, you need two insurance. You make sure the master one is okay. And also you make sure the HO6 is okay. So condo has a lot more work. The master one, when they give it to you from the HOA, they actually ask the master insurance to, for example, you're buying unit 6, they want a separate, if things that unit 6 belongs to you guys, Buck Stapleton, they have to name it, who owns that unit. So there's a lot of work. If the listing agent is really, really good, they can help with the master insurance. Okay, title, we just want to make sure it's cleared. Okay, there's no lien that's still on there that's not cleared. So everyone probably knows that the title should be cleared. Okay, but usually the title comes out the first item when you open escrow, but it has to be worked on. We just had one, but we closed. There was a problem with the title because the husband is a married man and sold in separate property. His wife quit claim to the property about 6 months ago. So title insurance wants the wife, the one to quit claim, to sign the affidavit that she really want to give up this property. The problem is she went to Hong Kong, can be found. A good story, right? So here's the husband. I think they're actually going to divorce, So she wants money, I'm pretty sure, to sign the affidavit. Now she find out he's selling. He's not making money. He's basically going to pay off his first and second debt. Well, end up she won't sign. Her parents are really upset because the happens he has the house sold for 1.3. He has a $900,000 loan on already. Then he has a $200,000 second. Well, the second was the wife's sister. They gave him a private loan. Well, the sister is really pretty pissed, right? If he can't sell, she won't get the money. So they really pressure her, I think. So finally it closed. So otherwise she wants some money from him. But he wasn't going to get any money out after the paying off the first and second and closing fee. So the title, they saw that very beginning, but they thought they're just going to find the wife. She'll sign the affidavit. Then she disappeared. But anyway, they found her. So we closed. And the vesting has to be confirmed. They always ask that. You have to decide. You're going to be joint tenant, husband and wife. They have to decide the vesting. So with all of those, you can probably take a screenshot. All of those are done. You can get CTC. So it's a little bit work. Okay, and that's it. Okay, I'm done. 11:30. Now I take questions. Two type of. Okay. Oh, so she's asking about the competitiveness of rate, points, and things between direct lender and various types of lender. There's basically two type of loan. Okay, the full doc, which is Fannie and Freddie. Those are very simple. You just have to look at the 10-year treasury. Every day is published. That rate flow with the 10-year treasury. Okay. The second one is the easy qualify. Easy qualify, each bank determine what they want to do. They think they have money, they want to give out more. Okay. So I'll just tell you the rate is today. For a full doc, 30 years fixed on the Fannie and Freddie, today is 5.75. Okay. This is the, consider you have good credit, everything is good. Not 500 credit score, but pretty much 760 or above. Okay. So if you have not full doc, today's you can get something between 6.625 to range can go up to 7.5 or even 8. Depends on that one, really depends on how good your credit is. So you can't compare one to another. You can probably compare full doc to full doc. Okay. I think we have pretty competitive full doc pricing. Yeah, but full doc you can go online and shop and see what they have. But online, the problem is when time you want to lock, they're going to tell you the rate change or something. And people always ask, my client does not want to pay points and fees. On a refinance, we do a lot of no point, no fee. That's because, on a refinance, the escrow fee and title fee are very inexpensive. escrow would charge 700. You done purchase loan, escrow charge like 2,000 or 3,000, right? So the lenders would not be able to pay for that fee. So, but they could have no point when they want to purchase. But no point means the rate will be a little bit higher. For example, the best rate today is 5.75, but I don't want, at this, I don't want to pay point. That one you need to pay point. So if you move to 6%, you can probably have no point. So something like that. Okay, but the full doc is pretty much go with a 10-year treasury. So you can find that record everywhere. Everyone should be about the same. Is that okay? Or you want to know a little bit more? That's okay. Okay. Question. Oh, the detector?
Yeah, because if the house is 2-story house and they have a 3-bedroom upstairs, 1 bedroom downstairs, how many they have to install?
I don't know how many. I think you need one downstairs, one upstairs. Do you know? Yeah, one downstairs, one
Is
upstairs.
that close to the kitchen or close to the bedroom?
It's close to the hallway going to the bedroom. So what the idea is that you're sleeping, all of a sudden the gas went off, then you're gonna be so it's where the hallway going to the bed.
So that if there's a 3-bedroom upstairs, just put one on the hallway,
Hallway.
another one on downstairs.
Yeah.
And how about the PUD? PUD is same as the condo for the requirement?
Well, PUD is a way you describe a property. For example, my house is a PUD, but the reason it requires PUD is a planned unit development, but have a single family home in a gated community. They call it PUD. The distinction really for us to find out now, some are called unattached condo, some are called attached condo, is when you ask them what type of insurance. They have a master HO insurance. This one is a condo on all practical purpose because you need to buy a separate insurance. You have a master. My house does not have a master, which means we're in the PUD. We buy our own insurance. So some people tell me unattached. We have a house. My son has a house in Irvine. It's called, because the lot's so small, they call it unattached condo. There's hardly any yard, but still there's no master insurance. He buys his own insurance. So PUD cannot exactly describe what they have. So you need to find out from the owner whether there's a master insurance on that HOA master, then you know technically is that a condo or a single family home. Yes.
Will it be the issue for fire door? Fire door, the garage.
Yes, it's an issue. Yeah. Okay. So appraiser only look, they don't touch things. Okay. If you tell them this is a fire door problem, they're going to put on the report. The people that tell you that's a problem is the inspector, right? But we really don't look at the inspection report. We don't see it. Okay. The appraiser, they don't look at those things unless it's very obvious. Then they'll put it on the report. Then you have to change it to a fire protection door. But I think they should change it anyway because the inspection report has it, right? The automatic shutting door, right? Yeah. Any other question? Yes.
Okay. Hi, Judy.
Hi.
My son has a condo in NorCal a few years ago, and he tried to refinance, and we submitted the loan doc to Chase, and it was rejected. The reason why it was rejected because of the flood zone. He said, well, the bank says the condo is located in a flood zone. But then eventually we turned the documents over to you, and you did.
Oh, that's your son.
Yeah, that's
okay,
right.
okay.
That's right. You don't have
familiar.
very good memory. Well, anyway, you got a loan approved and got a very good rate because it was back in the pandemic time. It was 2 point something.
Yeah.
Can't beat it now. So my question is, if the condo or any property is located in a special zone, like a flood zone or maybe a flood earthquake zone or anything, does it make it very difficult or almost impossible to make the loan? Or what kind of?
It's not as
certificate?
possible. You have to, it's the insurance. Remember when we were dealing with that property, keep on asking for type of insurance, what did it cover? So finally, I think the insurance company, the owner said it did cover the flood because it's like a high fire zone. It's lender if you have insurance, right? So the issue on these property and these zones is whether the insurance company would take it. I don't know about PV, you know, I'm not sure they're gonna insure PV, you know, the thing is falling down. Okay, so the problem is not that, the property itself, it's insurance that would do it. But some people buy cash, then you don't have a problem. It's called self-insured. Okay, then you can buy anything, but some deal is that this is a cash deal, lender is not gonna do, it. But that means there's something wrong with it. But it's not a problem with the property, it's just that you can still find insurance.
Well, the problem was the condo has a master insurance
That's right.
policy, and it does have coverage for the flood zone.
Mhm.
But somehow the bank doesn't accept it. It says that either the coverage is not enough, or maybe it doesn't cover the whole parking lot. You know, some
It was a
ridiculous
very
things like that.
strange, you have 3 different buildings, I remember that.
Uh,
But anyway, we finished that loan, right?
That's right. Yeah. Well, Judy is very, very knowledgeable, and she's very capable. Yeah, she
I-
got the loan at a very good rate.
I
Yeah.
think, I remember, I said, that sounds like a property we did. That was a very difficult property.
And somehow you you sold it to Chase, and Chase rejected us at first place.
They bought it, right?
They bought it.
Yeah,
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 you sold it to them, you know, but they reject us at first place.
Yes, it's very interesting.
Yeah.
Okay, and you have any question? Well, Chase is a very difficult lender. It is. But that they're part of our investor. Once we accept, they'll just buy it. I don't know. They'll buy it.
They accept the master insurance policy from the HOA.
Well, they just bought the loan from us. I think it's okay. That's why
Oh,
they said we accepted their underwriting. But the underwriter could be hard. Underwriter are different. They are different. Any question? No,
Actually, I do.
okay.
Judy, thank you. How do you, when you talked about no loan doc, is that also for foreigners that don't have social security number?
Yeah,
And on the visa?
Yeah, I covered that. Yeah.
Thank-
We're just finishing one up, it's in Northern California. So they show their passport photo. They don't have social security number, but they have money. They have a lot of money. They need to put a little bit more in reserve. They have more reserve money. Foreigner, yes.
How do you calculate also on ADUs?
Oh, that's a tough one. Okay,
Thank
so
you.
I'm doing one ADU now. Okay. The person insists her properties was 1.2 because she finished ADU in the West Covina. Okay. Before she bought it for 800,000, she finished ADU, she says 1.2. So the appraiser is trying to get her, but she found he says only 1.1. He can't find anything 1. You have to find a comp, right? You have to find, but there's not that many ADU sold. You know, people who are ADU don't sell. So you have to find ADU that sold to get a comp. But more and more ADU being sold, then you can do comp. So he might be able to get her into 1.15 or something like do some. So she found her property in West Covina. She found one in the Pomona. She found one in Sierra Madre. But I see you can't use other city. You have to use West Covina. It's hard. Yeah. In the last year, I did one in Arcadia near I guess the Peacock place. Well, it was an ADU, hardly any ADU in Arcadia, north of Huntington. It sold for 1.6. Nobody can do the appraisal, no one. But the guys told me, we want it, we don't care. Appraisal, the highest we could get was 1.4, but he still wanted it. The reason why was the property they're doing ADU off south of Huntington in Arcadia. North you don't see many ADU done. So it was all the south are less expensive. So it doesn't matter what we did. So ADU for appraiser is difficult, but getting better and better. Is that kind of question? Yeah.
Thank you.
Just sell more ADU, they'll have more comps. Sell them higher. Okay, no questions? Okay, thank you. So thank you. So I have, if you want the PowerPoint, you can send your name there and your email, so I'll send it to you. Also, we have lunch if you haven't eaten, but some people ate already. You can have another one. Okay. There's the regular special mixed, and then there's the vegetarian on the right-hand side, and then the Chinese drink. Thank you for coming and support.
Yeah, we just want to thank you for coming out. The Education Committee, the chair is here. Mindy, would you like to say something? We like to host our affiliates, so please consider that for the topics.
Thank you. Thank you, everyone, for joining. Thank you, Judy. That was very informative. Thank you. So please, when you have a loan, remember our affiliates. Thank you.